Buying a home is one of the biggest financial decisions most people will ever make, but the process can be intimidating, especially when it comes to securing a mortgage. If you're a first-time home buyer or someone with less than perfect credit, you might be wondering if home ownership is even within reach. That's where an FHA loan comes in. The Federal Housing Administration, or FHA, offers a unique loan program designed to make buying a home more accessible, with lower down payments and flexible qualification criteria. But how exactly does it work? Who qualifies for an FHA loan? And is it the right option for you? Let's start with the basics. An FHA loan is a government-backed mortgage insured by the Federal Housing Administration. Unlike conventional loans, which are issued by private lenders without government backing, FHA loans offer lenders a level of security, because if a borrower defaults, the FHA steps in to cover some of the losses. This guarantee makes lenders more willing to approve borrowers who might not meet the strict requirements of conventional loans. The FHA loan program was created in 1934 during the Great Depression to stimulate home ownership, and today, it remains a popular choice for millions of buyers. But FHA loans aren't issued directly by the government. Instead, they are provided by FHA-approved lenders, banks, credit unions, and mortgage companies who follow FHA guidelines when approving loans. So, why do home buyers choose FHA loans? Let's talk about the benefits. FHA loans come with several advantages, making them particularly appealing to first-time buyers and those with limited financial resources. Here's why. 1. Lower down payment requirements. With an FHA loan, you can put down as little as 3.5% of the home's purchase price compared to the traditional 20% required for many conventional loans. For example, on a $250,000 home, a 3.5% down payment would be just $8,750 instead of the $50,000 required for a conventional loan. 2. More lenient credit score requirements. FHA loans allow borrowers with credit scores as low as 580 to qualify for the 3.5% down payment option. Even if your score is between 500 and 579, you may still be eligible, though you'll need a 10% down payment. 3. Higher debt-to-income ratio, DTI. Limits. The FHA allows borrowers to have a higher debt-to-income ratio than conventional lenders typically accept. This means you might qualify even if you have existing student loans, car payments, or credit card debt. 4. Competitive interest rates. FHA loans often come with competitive interest rates, even for borrowers with lower credit scores. Since the loan is insured by the government, lenders take on less risk, which translates to better rates for borrowers. 5. Assumable loans. FHA loans are assumable, meaning that if you sell your home, the buyer can take over your existing FHA loan, which could be beneficial if interest rates rise in the future. Now that we know the benefits, let's talk about the eligibility criteria. Who qualifies for an FHA loan? FHA loans are designed to be accessible, but there are still specific criteria you'll need to meet. 1. Credit score and down payment. As mentioned earlier, a 580 plus credit score qualifies for the minimum 3.5% down payment, while scores between 500 and 579 require 10% down payment. If your score is below 500, you may need to work on improving it before applying. 2. Steady employment and income verification. Lenders will want to see a stable employment history and reliable income. Typically, they'll review your last 2 years of tax returns, W-2s, and pay stubs. If you're self-employed, expect to provide additional documentation such as profit and loss statements. 3. Debt-to-income ratio, DTI. Your total monthly debt payments, including your mortgage, should not exceed 43% to 50% of your gross monthly income, though exceptions can be made for strong borrowers. Before, primary residence requirement. FHA loans are for primary residences only, meaning you must live in the home. They cannot be used for vacation homes or investment properties. 5. Property standards. FHA requires that the home meets certain safety, security, and structural standards. The property must pass an FHA appraisal, which ensures it's in good condition and worth the loan amount. Homes with major safety hazards, like faulty wiring or foundation issues, may not qualify. Beyond qualifying, it's also important to understand how much you can borrow. It's a mortgage insurance. Loan limits vary depending on where you live. In 2024, the FHA loan limit for a single-family home in most areas is $498,257, but in high-cost areas it can go up to $149,000. You can check your county's specific limit on the FHA website or ask your lender for details. Another key aspect of FHA loans is mortgage insurance. Since FHA loans require a low down payment, the risk to lenders is higher. To compensate for this, borrowers must pay two types of mortgage insurance premiums. One, upfront mortgage insurance premium, UFM. This is 1.75% of the loan amount, typically rolled into the mortgage rather than paid up front. Two, annual mortgage insurance premium. This is an ongoing fee added to your monthly mortgage payment. It ranges from 0.45% to 1.05% of the loan balance per year, depending on loan term and down payment. Unlike private mortgage insurance on conventional loans, which can be removed once you reach 20% equity, FHA mortgage insurance stays for the life of the loan unless you refinance into a conventional mortgage later. So, is an FHA loan the right choice for you? Let's compare the options. Is an FHA loan right for you? And conclusion. FHA loans are a fantastic option for many buyers, but they aren't for everyone. If you have strong credit and can afford a higher down payment, a conventional loan might save you money in the long run, especially since you can avoid FHA's mortgage insurance costs. However, if you're struggling with credit, saving for a down payment, or need more flexible approval criteria, an FHA loan can open the door to home ownership when other options might not. Buying a home is a big step, but with the right information, you can make confident decisions about your financing options. FHA loans provide an accessible path to home ownership for millions of Americans, and if you think you might qualify, the next step is speaking with an FHA-approved lender to explore your options. What do you think? Navigating the world of home loans can feel overwhelming, but understanding your options is the first step toward making informed financial decisions. FHA loans have helped millions of Americans achieve home ownership by offering lower down payments, flexible credit requirements, and competitive interest rates. Whether you're a first-time buyer or someone looking for an alternative to conventional financing, an FHA loan could be the key to unlocking the door to your dream home. However, it's important to weigh the pros and cons. While FHA loans provide accessibility, they come with mortgage insurance costs that can add up over time. If you qualify for a conventional loan with better terms, it may be worth exploring. But if you need a loan that accommodates lower credit scores and smaller savings, the FHA program remains one of the best choices available. At the end of the day, the right loan is the one that aligns with your financial situation and long-term home ownership goals. If you're considering an FHA loan, take the next step by speaking with an FHA-approved lender to assess your eligibility and explore available options. If you found this video helpful, be sure to like, share and subscribe to Journey Realty Group for more home buying tips, real estate insights and expert advice. And don't forget to leave a comment below. Are you considering an FHA loan, or do you have questions about the process? Let's start a conversation. Thanks for watching, and until next time, happy house hunting